The country's first fully locally owned commercial bank came on June 19, 1965, when the Cooperative Bank of Kenya was registered as a cooperative society, initially to serve the growing farming community. Co-op Bank, as it came to be known, commenced operations as a bank on January 10, 1968, with a start-up capital of only 255,000 Kenya shillings, supplemented by an interest-free loan from the government of 214,000 Kenya shillings, repayable in 10 years. The first fully government-owned bank, the National Bank of Kenya, was established on June 19, 1968, with John Michuki, then Treasury Permanent Secretary, as chairman of its board of directors. 2 years later, Michuki was appointed executive chairman of the newly established Kenya Commercial Bank. His place at the National Bank of Kenya was taken over by Stanley Githunguri. The government set up Kenya Commercial Bank after buying a 60% stake in the National and Grindlays Bank and splitting the bank up into two banks, the Kenya Commercial Bank and Grindlays Bank International, Kenya. KCB took over all but two of the branches previously operated by National and Grindlays Bank in Kenya. It was those two branches that constituted Grindlays Bank International, Kenya. Of the three newly established Kenyan banks, KCB quickly outpaced NBK and Co-op Bank, mainly on account of having more capital and a substantially broader branch network. In November 1976, the government assumed full ownership of KCB by buying out the 40% stake initially retained by Grindlays Bank of London. The formation of the government-owned banks had the desired effect of speeding up the provision of affordable banking services to the majority of the population. It also prompted foreign-owned banks to take measures to remain relevant in the Kenyan market and beyond. In 1969, Standard Bank of South Africa merged with the Chartered Bank of India, Australia and China to become the Standard Chartered Bank, StanChart. On its part, Barclays shed the Dominion Colonial and Overseas DCO tag to become Barclays Bank International. A decade later, it was locally incorporated in Kenya as Barclays Bank of Kenya, with Samuel Waruhiu as its first chairman, while T.D. Miles became the managing director. Barclays would later become the first bank in Kenya to offer its shares to the public, when in 1986 it floated 30% of its equity on the Nairobi Stock Exchange. The government and foreign-owned banks would not continue their virtual monopoly on banking for long. During the decade or so following the death of President Kenyatta in 1978 and his succession by his Vice President Daniel Arap Moi, 7 new banks and 33 non-bank financial institutions came up to join the single private indigenous bank, Co-op Bank. The main characteristic of these new banks and financial institutions was that they were small in terms of start-up capital. In 1980, the minimum capital required to establish a bank was 2 million shillings. That of non-banking financial institutions was 500,000 shillings. But as the new bank started experiencing cash flow and other problems, the central bank raised the requirements for start-up capital. By 1982, it was 5 million Kenya shillings, and by the end of the decade, it had been increased to 15 million Kenya shillings. But by then, a number of the new locally owned banks were finding it difficult to keep afloat.